Are you feeling the weight of the world on your shoulders, struggling to catch up with mortgage payments, and haunted by the fear of foreclosure? Well, you're not alone, and there is light at the end of the tunnel. So, this video is the first step towards turning the tide. Taking on a mortgage is one of the biggest responsibilities that adults face. Falling behind on mortgage payments can lead to paying more interest charges, late fees, foreclosure proceedings, and even losing your house. Not good, right? Well, the acceleration is a clause that can have serious consequences for borrowers. So when a term in the mortgage has been broken, right? The acceleration clause goes into effect, allowing the lender to demand the entire payable debt all at once, right? So that is definitely not a good thing. And the notice of acceleration must be served to the obligated buyers or the mortgagors, and they're given a specific period of time to make good on the loan, right? Or to make the loan good. So in the event of falling behind on mortgage payments, it's crucial to understand the implications and options that you have available. So if you find yourself in a difficult situation, such as falling behind on your mortgage payments more than one, it's important to take proactive steps and to address the issue and protect your home, right? So first off, you want to reach out to your lender and explore the available resources they have, right? Another question you may be thinking is, can a real estate agent or a realtor sell my home and prevent me from going into foreclosure, have a foreclosure proceeding against me? So real estate agents and brokers are crucial in buying and selling properties. But one common misconception is that that's all the agents do and they connect sellers and buyers. But there is much more to their role and AKA or also my role. So we can help you through the process if you've been served notice of impending legal actions against your home. So, what is the legal definition of foreclosure? So, here it is. Foreclosure is a legal process in which a lender attempts to recover the balance of a loan from a borrower who has stopped making payments to the lender by forcing the sale of the asset used as collateral for the loan, the home. So, this process ultimately leads to the lender repossessing the property due to the lack of payment. So, in some states, namely here in Michigan, which is where I am from, and this video is being recorded, there is a redemption period after a foreclosure sale of 6 months. So, during which the homeowner has the opportunity to make payments and potentially keep their home. So, homeowners facing foreclosure must understand the specifics of this redemption period in their state and act accordingly to protect their property. Well, if a realtor sells the property during the redemption period before the bank takes possession, there may be a possibility for the homeowner to receive some amount of money from the sale. This scenario would be if your mortgage amount owed is less than the sale price after all the costs, which include the legal costs at this point. So, for example, you sell your home for $250,000 and you owe $100,000. Cost to sell could be 10%, $25,000, which would leave $125,000 in equity, and you could walk away with that. It does happen. We had a client who walked away with a significant amount of money after the home was sold during the redemption period. Of course, some negotiations must be done with the lender, and we actually have a specialist that we use, specifically a short sale, I'm sorry about that, specialist that we can use for negotiations for all the parties involved. So I said the word short sale. You may be wondering, what does that mean, short sale? Well, if you owe more than the value of your home, a short sale occurs when the property is sold for less than the amount owed on the mortgage. This option is often considered by homeowners facing financial challenges, and they wish to avoid the foreclosure, but they cannot sell their home for at least the mortgage balance. So in that respect, then we negotiate a short sale because the lender's getting short funds owed that they owed. So in a short sale process, as in foreclosures, homeowners may seek assistance, basically, like I said, from real estate agents who specialize in these transactions. So we're professionals and we're experienced in navigating the complexities, obviously, in facilitating the communication between there's the homeowner, the lender, and the potential buyers, because there is a process, right? So our expertise or your local realtor can be invaluable before ensuring a successful transaction. So I guess the core idea behind a short sale is that the homeowners can no longer afford their mortgage payments and the value of their property has decreased below the mortgage balance. So by opting for a short sale, they aim to settle their debt and they avoid the repercussions of a foreclosure. So this process involves, like I said, negotiating with the lender to accept the sale price that a buyer's offering, and they're knowing that they're going to get less in the mortgage amount. So depending on the agreement reached with the lender, the seller may not have to bring any additional monies to the closing table, which is the whole point of doing a short sale. Normally, that is the way there is, but ultimately, a short sale is basically a strategic financial decision which allows a homeowner to proactively address their financial challenges, and like avoid the term foreclosure on their record. So it provides like an alternative solution. So it's not as bad on your credit report, a short sale versus a foreclosure. So, and yes, as in the previous one where we did our buyer or seller walked away with money, we've negotiated short sales in the past. So, like I said, it is very important to consult legal experts or financial advisors, or start with your real estate agent, and then they can guide you, so you know the implications and the financial outcomes. So it is challenging, guys, and it's a complex process, but it is done. And there are steps that a homeowner can take to address it. I don't want you guys to hide if you're late on a payment or two. So, there is hope at the end of the tunnel sometimes. If your first month you are late on a payment, make that phone call to the lender. So it's the key. Sometimes they have grace periods, you know what I mean, that are outside of the original grace period that is in your mortgage. So each one is unique, obviously, as we say, but the first thing is pick up the phone and call your lender. Make the call. So you may remember back in 2008, if you were actively in real estate or you were in the market or you knew about these houses, there were a lot of foreclosures in 2008. They were due to the adjustable loan resets on the mortgages, right? They got adjustable loans, and the home prices were falling. So when their loans reset to the higher interest rates, many borrowers weren't able to afford their mortgage, and simultaneously they couldn't really sell their homes. So the value was less than what they paid, and due to the falling home prices. So that was a bad time. And when were the foreclosure rates at their highest in the United States? Well, the highest point of that foreclosure activity occurred in 2010, which was a period that they referred to as the foreclosure crisis. So basically, the homeowners failed to keep up with their mortgage payments. So especially there were people that had high risk subprime loans. So this contributed to like the bursting of the housing bubble. So there was a surge in home repossessions and a significant drop in the value basically of securities backed by mortgages, right? So the next question is, you're probably thinking, what are mortgage-backed securities? Well, it's all tied together. I'm going to bring this home. I'm going to land this plane. Mortgage-backed securities are financial instruments that represent claims to the cash flow, right, from the pools of mortgage loans, typically in residential properties. So lenders bundle these individual mortgages, including the principal and interest payments, into those securities, and they basically sell them to investors on the market. They sell them out, right? Well, when homeowners pay their mortgages, these payments flow to the mortgage-backed security investors, right? However, if homeowners start defaulting on their loans, basically like what happened during the foreclosure crisis, these securities generated less income for the investors than expected. So this is because the payments from the mortgagees stopped, decreased or stopped altogether. So basically, the significant drop, it occurs because the market realizes that this flow of securities are not going to materialize as planned, like I said. So that makes them a much riskier and less valuable investment. So this realization can actually happen suddenly, basically, and that leads to a sharp decline in the price of these securities. So all that being aside, during the foreclosure crisis, this drop continued to the global financial crisis, and many financial institutions, they held these large amounts of these now devalued securities. So it was a snowball. It wasn't good. No. So what did home prices do at the time? What was happening with their values? Well, as you can imagine, the median home sales, it plunged. It plunged by 82% between 2006 and 2008 because all this started in 2006. But can this happen again? Well, let me say a substantial wave of foreclosures isn't likely in 2024. And that's what I say, a substantial wave. But unlike during the mortgage crisis, most of the homeowners won't go underwater on their mortgages, even if prices decline. Our home values are so much more now. So we're not getting these subprime loans. But let me tell you, in conclusion, a competent real estate agent can indeed assist you in selling your home and potentially avoiding foreclosure. So that would be me or someone in your local market or someone that you knows that can navigate and negotiate and manage your transaction. So to bring you to a successful sale. So as I said before, always consider reaching out to a local real estate agent that you find reputable or one that you've worked in the past, because sometimes you have a realtor that's your realtor. So thank you guys for joining me today. So if you found this information helpful and you want to stay updated on more economic insights and how they may affect you, make sure to like, share, and subscribe. So your support enables me to continue providing valuable content to you, my viewer. So, and remember, I'm always here to answer your questions. Drop a comment below or reach out directly. I do respond to all of them personally. So at the end of the day, together, we're making more than just navigating, or we're more, should I say, than just navigating the housing market. Together, we're building foundations for families to thrive in their dream homes. And remember, we're family helping families, and we greatly appreciate you.